Welcome to Bloomberg Markets. I'm Katie Greifeld. Let's get a quick check on what's going on in the equity market because we have decidedly a down day. The S&P 500 currently lower by about 0.4%. The Nasdaq 100 Big Tech a little bit more resiliency there, but still down by about 0.2% for both of those benchmarks. We are coming off of 6 straight weeks of gains, so taking a little bit of a breather, of course, as we await earnings season, really getting into the heart of it, of course, as we await that Fed decision and as we await that presidential election coming in 15 days. Meanwhile, you're taking a look at the bond market. That sell-off accelerating right now. 10-year yields currently higher by about 9 basis points. We are trading at 4.17 on your benchmark treasury yield. And then you take a look at volatility in the equity market building right now, still below 19, but trading, of course, a little bit higher on the day. Meanwhile, let's get some midday movers on the equity side. We'll do that with Abigail Doolittle.
Katie, let's start off with some deal news or potential deal news. Humana and Cigna, at this point, both lower. Earlier, Humana had been higher on a report by our own news that Cigna and Humana were back in talks for a potential deal. This report came out late last week, the early stages. This is the second time we've heard this sort of a report this year, and it would create a very large company with more benefits spanning a greater degree of workplaces. The market capitalization would be closer to $125 billion. And one analyst over at Mizuho saying it's a matter of when, not if. But right now we see that investors not really favoring it, especially for Cigna. We also have some weakness for the airlines. The airlines are broadly lower. We do have United Airlines actually flipping higher at this point, but Delta Airlines, Southwest, American, both all lower. Southwest, interestingly enough, there's talk between the idea that they are trying to ease tensions with Elliott around a proxy fight. United Airlines up slightly. Save or Spirit Airlines soaring. The last time I saw that airline up about 50% on the fact that it's been able to extend some financing. I think one pressure on airlines today is the fact that oil is higher. There's typically an inverse relationship. So with oil up 1 to 2%, that is a weight on the airlines side of United Airlines and Spirit Airlines. Finally, Nvidia, a record high above that $140 area, well above it, in fact, up 2.3%. Some analysts and strategists are saying that what will be key for Nvidia in terms of whether or not the strength can continue could be the big tech earnings next week. Will they give more loft to Nvidia? And then, of course, Nvidia reports in November 21st. And it is interesting to note that when we had that big sell-off in Nvidia, there were a lot of shareholders selling, including reportedly CEO Jensen Huang. Since his selling stopped, Katie, it seems as though the stock has not only stabilized, but has again rallied and recaptured a new record high.
All right, Abigail, thank you. And let's keep this conversation going now with Bloomberg's Mike Regan sitting to my left. I thought you were a crypto guy now.
A little bit of this, a little bit of that.
All right,
what do you need?
A decorated history covering the U.S. stock market. Let's talk about the call of the day, probably of the week. That coming from David Kostin over at Goldman Sachs, basically saying that we're going to get annualized nominal total returns of just 3% over the next 10 years for the S&P 500. You think about what we've just seen, this very long bull market that we've been existing in. There wasn't necessarily a specific catalyst that he was calling out.
Well, the main thing he's worried about is the heavy concentration in the S&P 500. You look at these Mag 7 stocks, and you're talking about more than a quarter, almost a third of the entire S&P 500. If you're going by the traditional market cap weighting, is these 7 stocks. So Kostin and his colleagues are basically writing, look, historically, it's hard for single companies to keep up this type of sales growth and high profit margins. And he sort of extrapolates that for the entire index and says, when you have this much concentration in an index, it's going to be hard for the index then to perform well. But what I think is really interesting, and obviously this report's catching a lot of attention. I mean, it's kind of bold to predict 10 years of stock market returns all at once. But one thing he does sort of throw out for the bulls there is that maybe you don't play the S&P 500, but play the equal weighted version of it, because he thinks...
Sounds boring, though.
Yeah. I mean, mean, but boring sometimes wins, and he's saying, if this concentration does start to fail, that the return should broader out. And he's talking about anywhere from 2 percentage points to 8 percentage point outperformance over the same period from the equal weight version. So not as really bearish as it sounds on first blush if you really want to just shift into that equal weighted strategy.
Well, to that point, let's talk about the contours of his call, because Costin's interesting. He raised his year-end S&P 500 forecast earlier this month. His 12-month target for the S&P 500 is 6,300. That's 11% over the next coming year. So we're going to have one more year of the good times, and then maybe,
It sounds like it, yeah. And, obviously, another really fascinating thing over that 10-year span that he wrote is interest rates. Clearly, he has 5 sort of criteria on which this model is based. Interest rates is an interesting one. 10-year yields at 4%. He's saying there's a 72% chance that bonds will beat stocks over the next 10 years. So.
Well, I'm cooking on something. So let me run this theory by you. This basically to me looks like a call for cash, because if yields are going to stay high enough for bonds to outperform, that doesn't imply that the Fed is going to necessarily cut rates to zero. So why wouldn't I just stay in cash?
Well, I guess if the Fed does eventually start cutting and those yields come down, you're going to get that price return and the yield on the bonds. So I think cash works until you hit that inflection point where you really know that rates have reached a peak and are going to start to come down, which, tricky thing to time. Clearly, another big story out today, T. Rowe Price strategist saying, brace for 5% Treasury yield. So, if you really want to get uber tactical and market timing on it, maybe cash is a better way till you know that sort of inflation is under control and the Fed is going to start cutting more aggressively and bring those yields down. But tough call to make on a timing basis. Yeah,
it's also funny. We were speaking to Eric Johnston of Cantor earlier on open interest, and he has a 2-month tactical call on small caps. Then you want to get out. So a lot of tacticians in this market. But let's talk really quickly about Carson Block. Of course, he joined Bloomberg Television earlier today saying that basically if you take a look at the passive bid in this market, all of the 401k assets out there, that should basically just support stocks from here.
Yeah, kind of a bizarro world today when we're talking about one of the most famous short sellers in the market saying just buy the Mag 7 and Goldman sounding a little bit more bearish. But, there's a lot to be said for what he's saying in that, as long as unemployment stays low, you're going to continue to have a lot of people pumping money into 401ks. And what do they tend to buy? Well, mostly these index funds that, regardless of the valuations or all these worries about concentration, that is a sort of perennial bid for the traditional market cap weighted S&P 500. So hard to argue against him on that point. I think, he's not making as far a call as far into the distance, I don't think, as Goldman did with this 10-year call. So, I think for him, it would have to be a matter of timing as well. But, for now, if you're confident in this unemployment rate staying down and the job market remaining strong, Carson Block's point makes a lot of sense. Stick in the market. That passive bid is going to continue to bid things up.
Yeah, big time. Those price-insensitive 401k plans. Mike Regan, it's great to see you. That, of course, is Bloomberg's Mike Regan. And let's turn now to politics, because we are just over 2 weeks away from Election Day, if you can believe it, and this race continues to intensify. For more on the latest, we're joined now by Bloomberg Balance of Power anchor Kaylee Lines. Kaylee Lines, walk me through the next 15 days. What does it look like when we talk about both of these camps?
Well, it's going to be a frenzy of visiting the states that ultimately could decide the balance of the Electoral College and therefore the election in its entirety. Katie, Kamala Harris today visiting all 3 of the blue wall states, Wisconsin, Michigan, and Pennsylvania, doing so with former Republican Congresswoman Liz Cheney at her side as she tries to court moderate voters. Donald Trump was just speaking in North Carolina, another battleground we're watching. He'll be traveling to Pennsylvania, Georgia, some of the other states this week as well. So it is going to be frenetic, and it is not just the candidates that are on the trail. As I mentioned, other surrogates too, not just Liz Cheney, but the Obamas, both former President Barack Obama and Michelle Obama, will be alongside Harris in the coming days. And of course, Elon Musk is out in force in Pennsylvania, not just holding rallies in support of Donald Trump, but offering $1 million in sweepstakes every day between now and November 5th to those who registered voters who sign an online petition supporting the Constitution and the right to free speech and to bear arms. So at this stage of the race, Katie, it really is going to be about driving turnout, getting voters excited to go head to the polls. And we know there are already millions of voters who have done so early. This election is technically already underway.
Yeah, a lot of mobilization. Of course, that's what's happening at this stage of the game. There's a great story on the terminal on Bloomberg.com about Harris and Trump scrapping for those few undecided voters. How big is that cohort of voter at this point? Who's still undecided?
It's a very small number, Katie. The vast majority of voters already do have their minds made up whether they're going to support Donald Trump, Kamala Harris, or neither of these candidates. So the basket of those still able to be influenced is really quite small, and even smaller in the states that we're talking about, the 7 battlegrounds that ultimately hold the keys to the Electoral College. We could really be talking about just tens of thousands of voters at this point, which ultimately could be the margin, which is why this is so significant. We are talking about all of these polls in these states showing them consistently within the statistical margin of error. So even if we're talking about, say, 1% of voters who are still undecided, that 1% could be the amount that makes a difference between a win or loss for any given candidate, which is why the mobilization efforts is so important here, and a big part of that is money. We have the latest fundraising figures from the Harris campaign that shows she raised $378 million across her campaign and affiliated committees in September. That's about 2.5 times the $160 million that the Trump campaign raised, and she is outspending him as well by a margin of about 3.5 to 1 on things like advertisements and on the ground game, things that could drive voter turnout.
And we'll, of course, see the return on that investment in just about 2 weeks' time. Bloomberg Balance of Power anchor Kaylee Lyons, thank you so much. Now, coming up, our stock of the hour is up next. Of course, we're keeping an eye on Boeing as it enters a critical week, with investors really looking to see if there's changing winds for the struggling aerospace giant. That's next. This is Bloomberg. Welcome back to Bloomberg Markets. I'm Katie Greifeld, and it's time now for the stock of the hour. And today we're taking a look at Boeing as it enters a turbulent, critical week. Shares climbing on news of a vote on Wednesday that would end Boeing's ongoing labor strike, and that vote is expected just hours after the company's earnings report. For more on this, I'm pleased to say we're joined by Gabelli Fund's portfolio manager and aerospace and defense analyst, Tony Bancroft. Tony, I am so excited to speak with you because I've spoken to analysts about Boeing. I've spoken to reporters about Boeing. Really interested here to get the investor take. Needless to say, it has been a rough ride for Boeing shares this entire year, really. How have you been investing around that? How are you thinking about your positioning in this stock?
Thanks, Katie. It's great being here. I think, obviously, as you said, it's been a long road for Boeing this year. But I think the big picture is the secular tailwinds that are impacting the commercial aviation industry have not changed, and if anything, have just incrementally gotten more positive. Demand is high. There's a decade of backlog for both of the OEMs. And, commercial travel continues to increase, and Boeing is right at the center of it. And, there are some obvious near-term headwinds going on right now with the union contract and obviously a potential equity issuance. But I think most of the bad news overall is behind us, and now we can look forward and get this contract hopefully done this week. If not this week, hopefully very soon, and then move on and start looking ahead past these earnings, which they've already been preemptive on, and essentially kitchen sinked this quarter, and then start seeing where the company is focused on next, which is definitely the 38 per month cap for the 737 MAX.
So it's interesting to hear your conviction and your commitment to this name. Of course, you also manage the Gabelli Commercial Aerospace and Defense ETF. The ticker there is GCAD. I am curious, what would change your mind? We're already down 40% year to date. What would you need to see before you say maybe it's time to trim, maybe it's time to throw in the towel on Boeing?
Well, I think I've hung on this long. I think I think most of the bad news is out. There's probably not much more that we're going to see on the downside. Obviously this negotiation go on a little longer than expected, but Boeing, I think, has a good plan in place, and I think in the long term it's going to do well. In the near term, of course, more defense news on the defense businesses, which they've taken some charges for this quarter preemptively, and seeing that, and hopefully that will improve. But overall, I have a hard. I think it's a good long-term value story and growth story for that matter for Boeing in the industry.
And Kelly Ortberg, of course, he is the new CEO. He's coming up on his first earnings call as CEO, and he's already been very active, of course, in the past couple of weeks, those job cuts getting announced from Boeing. And Kelly Ortberg talking about the need to be clear-eyed here when it comes to righting the ship over at Boeing. What would you like to see Kelly Ortberg do when it comes to strategy? Because something that comes up all the time, for example, is whether or not they should spin off the space business, for example. As an investor, what would you like to hear from Ortberg?
Yeah, I think he really, the number one thing obviously needs to focus on, which hopefully this gets done, is negotiation. And then after that is definitely the focus on getting the FAA to lift the 38 per month rate cap for the 737. I think going past that, then you start looking at the defense business, and again, some of that is just sort of a runoff from their historic contract with how they bid those, having those being fixed price on the development side. That's going to eventually start anniversarying and running off, and those contracts will eventually improve. I think, longer term, as far as what you do with divestitures, anything that's just non-core. It's nothing, no brain surgery here, just things that Boeing just doesn't have the comparative advantage on. And, anything that flies, anything that is about commercial aerospace or defense business, which they're both, obviously leaders in. They're one of the largest defense businesses in the world, and the largest, one of the largest commercial, obviously, businesses in the world. So anything that doesn't have to do with that, they probably shouldn't be spending their time on, and you'll probably see more of those. They've already done a few of them, of course. We've seen some news on that.
Right.
But long term, I think we have a good plan in place, and once these jets start getting produced, Katie, it's a very profitable business. There's a lot of operating leverage in this business. The problem right now is they're operating these factories that essentially are not producing new planes, and they've had to deal with that. Right. To maintain these jets that have not been delivered. So once that gets all cleaned up, it's going to be a pretty good business.
All right, it's a long to-do list, but really enjoy this conversation. Of course, busy week coming up for Boeing. Really appreciate you taking the time to walk us through it. That is Gabelli Fund's portfolio manager and aerospace and defense analyst, Tony Bancroft. Now, coming up, volatility still elevated today, but will tariff threats and election uncertainty keep markets anxious beyond Election Day? We're digging deeper next. This is Bloomberg. Welcome back to Bloomberg Markets. I'm Katie Greifeld. And tariffs, of course, have become a huge topic in the final weeks of this election season, with Wall Street bracing for potential shifts in policy from a Trump or Harris administration and any other pressures that could induce volatility. For more on this, we're joined now by Bloomberg's Abigail Doolittle, as well as Interactive Brokers chief strategist Steve Sosnick. And Steve, let's get a little bit fancy here, because I can just take a look at the VIX to get a sense of how this market is feeling about volatility. But where else should I be looking, keeping an eye on, of course, as we try to keep track of anxiety around tariffs rather specifically?
Great to see you, Katie. Well, the VIX is always a great place to start in terms of where the market's, mentality is. I'm not, of course, a firm believer that it's a fear gauge. It's really more of a proxy for the demand for hedging. But it's telling us that there is still some demand for hedging, and that the race is not necessarily done yet. Also, then the next sector that I look for, which is to me the bellwether of all bellwethers, is semiconductors, because I've done the work, and essentially, if I plot the semiconductor sector as an independent variable, it moves the NASDAQ, it moves the S&P 500. Correlation is not causation, but that is the most politically fraught sector, even beyond energy and industrial policy, other industrial policy. So those are the places that I keep looking.
How much, Steve, do investors really care about this election? It's interesting. At the end of the day, it's going to be the corporate profit outlook. The growth for this quarter, 3%, the quarter before 10%, the quarter after 12%. So it does seem to have some kind of impact. And yet it seems as though we're not really having all that much volatility into this election, at least yet.
No, because I think, Abigail, it's because we don't know what's going on. Yes, the polls have moved. Yes, the prediction markets have moved. And, and I say this as someone who, our company has a prediction market, the forecast, IBK, our forecast trader. But still, there's still no consensus as to what's going to happen in terms of, all the parties going to control. Is one party going to control all the levers of power or not? That's really what the market gets most concerned about. And going forward, we still can't ignore the fact about earnings and interest rate policy, all of which are converging at the exact same time. So I might argue that we're particularly not as concerned as we might otherwise be, or maybe should be.
All right, Steve, we have to get you back on for a longer conversation. I feel like we're just getting started, but we're up against the clock. Interactive Brokers Chief Strategist Steve Sosnick, thank you so much. Meanwhile, a really quick check on these markets right now. You take a look at the S&P 500, lower to the tune of about 0.3%. If you take a look at the sector level, you only have one sector in the green, and it's technology, currently higher by about 0.4% on the sector level. All other 10 sectors are in the red right now. Real estate is your biggest loser on the day, down by almost 2%. I'm Katie Greifeld. That does it for Bloomberg Markets. This is Bloomberg.